Good afternoon to everyone. I hope everyone is safe in this pandemic time. And I would like to welcome you all for this 6-day long webinar series on GST litigation and how to convert the challenges into the opportunities. And today is the second day of this webinar series. And today the topic is GST litigation, ITC, including transitional credit. And for that, we have one of the most renowned speaker in India, Mr. V. Raghuraman, sir. I welcome Mr. V. Raghuraman, sir. Good afternoon, sir. And
thank you, sir. Thank you.
Before that, I would like to welcome another renowned speaker from Jaipur, C. Yashasvi Sharma, sir, for his keynote address. And I would like to welcome him for speaking a few words, sir.
Thank you, Akhil. Chairman of Jaipur branch, Akash, and his entire team. Raghuraman sir, who himself is an encyclopedia of indirect taxes. Ladies and gentlemen, I wish all of you a very happy and safe good evening. I wish all of you are safe and more importantly, you are at your home. So be at home and be safe. Friends, first of all, I would like to congratulate Akash and the entire team for conducting a very different program for the members, wherein the entire sessions are so designed that those sessions would be related and flourish with relation to the litigation and litigation only. So what is basically this entire workshop is all about is litigation and how to groom yourself, especially the younger brothers and sisters of our profession, to groom them for the litigation. Friends, when Akash first discussed this program to me, I was more than delighted to be a part of this program. And indeed, it is a matter of privilege for me to be a part of this 6 days long workshop, because litigation is one area which is of my forte. Rather, I would say that I love to do litigation, and that I have been doing since last more than 20 years now. So I was the first person to grab that, yes, Akash, you must go for it. And it is a unique program. And fortunately, we have renowned speakers such as Mr. Raghuraman today. So we should take the most of the benefit which we can take from him. And he, as a guide also, he can, guide us that how the younger generation should go for it. See, friends, many of you must know that I have been a big advocate of preparing yourself for the litigation, and especially the youngsters. I always tell them, I have repeatedly told this in my so many deliberations since 2016, that GST is one act which is litigation prone. And we are here as a professional, being an advocate or a chartered accountant. We are not here for the compliance purpose. We have taken our degree for and invested our thousands of the hours of our life in taking those degrees. And that is not for the compliance purposes. We need to prepare ourselves for the litigation. And if you see around that, you can see that the importance of this field is evident from the flood. No, I would not say flood, from the taute of notices around. You can see that, if we talk about input tax credit, which Raghuraman San will deal today, and refunds, registrations, cancellations, e-way bills, searches, summons, and notices are all around. So wherever you go, you see that, sir, this notice has come, this notice has come, this notice has come. And believe me, friends, these notices are coming with a great professional opportunity for all of us. First thing which we have to learn is how to, proceed with that. Whatever the notice has come to you, that how you will prepare yourself, how you will deal with it. So this program, as the program gradually grows up, you will come to know some of those important aspects also. In that line, friends, the most important part and the piece of this entire legislature of GST is undoubtedly the input tax credit, which is popularly known as the ITC. And I would not be exaggerating if I say that the ITC is the backbone of GST. The entire GST law revolves around this ITC provisions. See what happens. The revenue always willing to minimize it. That how we curtail this ITC to be given to be allowed to the assessees. And as an assessee or the consultant to the assessee, we try to get as much as possible. So that is always an area of conflict between the revenue and the assessee. Needless to say, the basic idea behind GST was that there would be seamless credit flowing across the country, and that I'm afraid to share and say. You might have also seen that and dealt those things, which clearly defies that this is not the case. ITC to an extent is flowing seamlessly, but not the entire ITC is flowing. And there is a litigation prone area, as I already told you, that because the ITC is one thing, as you can, it is evident from the figures which are shared by the government also, that in last 1 month we have received more than 1.25 lakhs crores of collection in the ITC. But we as a professional know that how that figure is reached. Is there any role to be played by Rule 86 capital A? Is there any role to be played by Rule 36 within bracket 4? So these things we know, but collectively when government comes out with these figures, they will never say. But having said that, this is the most interesting and litigation prone area as far as GST is concerned, in my view. Now, let us see that how the provisions of law and judicial pronouncements are flowing right now. That I will not deal. Raghuraman sir will put his knowledge and wisdom on that. Not taking much of your time, I would just flag some of the issues before sir takes over, and I appeal him to give his understanding, thoughts, his wisdom, and his comments on these issues. Since the we have we have formed this today's program for the ITC and the transitional credits as well. So as far as sir, my 2 points as far as the transitional credits are concerned is one related to the second proviso to subsection 1 to section 140, which is there in the state laws relating to the declaration form submission. So as far as that particular denial is concerned, now the notices have started to flow. So one thing I would request you to kindly enlighten our younger members that how to proceed with those particular notices.
Which
Second,
notice, sir? 140, is it?
140 second provision to subsection 1 relates to the declaration forms.
Okay.
Second point in transitional credit is with relate to the builders, wherein these structures are standing tall on 30th of June 2017. And now the department says that since those structures are in the nature of a movable property, then how to deal with those particular ITC on those. These two issues were there with regard to the transitional credits. Now, sir, input tax credit, as we all know, it is flowing from section 16. Then there are there is clause C of subsection 2 of section 16, which a constitutionality of which has already been challenged before the Honorable Delhi High Court. Also, two of the cases are in my knowledge. One is in the case of Federation of Indian Small Scale Battery Association, and the other is Andhra Pradesh High Court in the matter of Bharti Airtel. So, what is your thought on this particular subsection and clause, which relates to the actual payment of tax? And there are Rule 36 within bracket 4 and new insertion of 86 capital B, 1% cash payment, and you cannot take the credit. Sir, my submission is that these provisions, if you can enlighten us with regard to Article 14 and Article 19(1)(g) of the Constitution of India. So that would be a great help for our members. Next point is related to blockade of credit. In that 3 points I would like to put forth. One is the availability of ITC on elevators. Whether the elevators, lifts. Whether the Kone elevator Supreme Court judgment will flow here also, that is one point to be discussed. Second is how to interpret the free samples, when it is in the nature of business, when it is not. Third is destruction, destroy. I mean, I just want to give you an example, as such as I have bought a machine of 1 crore of rupees, and somehow I managed to destroy it due to some power fluctuation or some this taute problem or something else. Now there are two scenarios. One is that if I can sell that particular machinery for 10 lakhs, then what will happen? And if the entire machinery becomes zero value, then in that case, what will happen? So those two, 3 points were there, which needs your expert comments on. So 2, 3 judgments also I have taken out for the benefit of the members attending. One is in the case of Arise India Limited, the Supreme Court, in which the SLP was rejected by the Honorable Supreme Court in the matter of Arise India, which was decided by the Honorable Delhi High Court. One point which I wanted to put forth here, sir, that in that particular judgment of Delhi High Court, the Article 14 and 19 1G were also discussed. So if you can throw some light on that, then it will be a great thing. And the second thing is that whether those particular erstwhile regime judgments, we can take shelter of those judgments in GST regime also. So that is also one point to be discussed. And the DY Bethel Enterprises Madras High Court judgment, in which the High Court has mentioned that the non-payment of tax by the seller, it is not automatic on the part of the recipient to reverse the credit. So how that particular judgment may be interpreted and applied in our initial notices, that is one judgment. And the last judgment which I wanted to put forth is the safari retreats, the Honorable Odisha High Court, wherein the construction credit was allowed by the Honorable Odisha High Court. In case when the end product is being used for renting out. So, sir, these were some of the issues which I wanted to put forth, and I hope and wish that you will enlighten our young members that how to go with those particular issues. And furthermore, what you have in your kitty, a lot of things which you might be discussing today. With that, I will close my opening remarks, sir. Thank you so very much. Over to you, Akhil.
Thank you, SSV, sir. And the issues that you have raised appropriately matches with the extent of GST Act, notification and circulars all combined. So without further delay, before letting Raghuraman sir take over the screen, I would like to read a brief profile of him. Sir, sir has been practicing as a chartered accountant and as an advocate since 30 years. He is having a degree of BCom. He has been a fellow chartered accountant, ACS, LLB, and grad CWA. Apart from these qualifications, his achievement range in both CA as well as CWA. He was a first rank holder in BCom in university, 38th in CA Inter, and 24th in CA final, and second rank in CWA Inter and 25th rank in CWA final. So he is not just a renowned faculty, but he is a renowned personality in terms of ranks also. And he has been specializing in the field of indirect tax planning litigation, and he has been appearing before the courts for GST litigation, excise, customs, service tax, foreign trade policy, and FAME. He has also been a visiting faculty at IIM Bangalore, and he has addressed a large number of seminars. As we all know, we have been an attendee to his webinar or seminar one day or other. And he has authored 2 books also, sir, not just one. One is Landmark International VAT Decision and its Relevance to Indian GST. And the other one is GST and Indirect Taxes Principle Demystified. So this was just a brief profile that we could have. And now I would like to hand over the screen to V. Raghuraman, sir. Sir, the screen is yours.
I thank the Jaipur branch, especially Mr. Akash, Mr. Akhil, for a very flowery introduction. and Mr. Yashaswini, because he has set the tone for the session. He has told what are the issues that he has flagged off, and so rightly he has pointed out all the important issues that have come up in the GST regime. He has flagged off all the important issues. I'm very glad that this session has started with a person of Mr. Yashaswini standing, specifically coming and telling these are the issues that we are interested in, because it helps the speaker also to narrow down and speak on those issues in some detail. And of course, the other issues will also be covered. We are not going to leave it out. So there's no need to worry about it. The first thing which I would like to mention here for all the youngsters who are watching this is that I agree with what Mr. Yashaswini said. You have spent years and years acquiring this degree. Please don't waste it in compliance. I was the first one who felt very glad when this audit 9C requirement was done away with, because I have been always telling before all the forums that this one saps your energy, gives you very little in return, and you are faced with prospects of getting the ire of the client for no fault of yours. And let me tell you, and this also I told you when I was speaking the budget, the very day the budget was announced, when I was speaking in Calcutta somewhere, it said, if you don't prepare the 9C reconciliation and submit it, the government will have no way to reconcile the figures between the profit and loss account and your GST returns, because nobody other than a chartered accountant in this country understands accounts. Let's face it. Let's be clear on that. So every one of your clients is going to get a notice how to reconcile. It's already happening. 26 AS, they take out blindly and issue notices across the country. It is happening. It is going to be threefold this that is happening. Whatever you have lost in terms of 9C preparation and audit, 3 times that amount you will make by replying to the show cause notices that are going to be sent by the department, because it will not stop in the assistant commissioner level or deputy commissioner level. It will go to commissioner appeals. Commissioner appeals will not understand. It will go to the tribunal. 75% of the cases tribunal will understand, 25% they will not follow. It will go to high court and therefore from the Supreme Court. So don't worry about the practice being if one window closes, another door opens. Don't worry. There is no question of one more window opening. One door will open. That is how it is in this country. And input tax credit is no exception to this rule. The basic understanding that Mr. Yashaswini described in this in 5 minutes, I'm sorry to say, is lacking among the executive and the judiciary. What is that basic? Input tax credit is the heart of the value-added tax mechanism. That's all. This is what the European Court of Justice has been saying ever since ITC was introduced in their common VAT systems. It was already there. It was being interpreted by the European Court of Justice. And they said, without the ITC, the VAT cannot work. And I'm very sorry to say that none other than our own Supreme Court is saying that ITC is a legislative concession. I'm sorry to say that the understanding is completely wrong. You cannot have a value-added system without an input tax credit system at all. If you say that you have a VAT 2003 or whatever you call it, value-added tax, which was introduced in 2003, 4, 5 and earlier, you could not have introduced a value-added tax system without the input tax credit, because that will mean cascading effect of tax. Simple. No GST system, unless it's a retail GST like Singapore or USA, no retail GST system can work. No VAT, you see, most of the countries follow what is called a VAT GST system. There are more than 160 countries which follow the value-added tax, which they call GST in some countries. In some countries like Canada, it is mixed with the excise law itself. If this is not done, you have a simple retail tax system, which is a retail tax collected at the retail stores in Singapore and US. No matter what, no value-added tax over there. But more than 160 countries are following this value-added tax. And value-added tax is not possible without there being input tax credit. Let us be very clear about this. Now, a time has come that we have to educate all our brethren, not only in the chartered accountants know it, our brethren in the advocate fraternity, our brethren who are sitting on the bench, that input tax credit is not a legislative concession, it is a constitutional mandate. The Constitution Amendment Bill says that cascading effect of tax should be done away with. If that is the case, then you have to do away with cascading effect. How will you do? There is only one method of doing away with cascading effect of taxes. That is through the invoice system which we follow in the input tax credit. That is the only way. There's no other way you can follow. So therefore, Japan used to follow another method, but they came out into the invoice system like which we have been doing for so long. If the department understands this, our litigation will actually stabilize into substantial issues. But since our department goes by, first 10 months, they will allow you to take credit. February and March, they will stop blocking your credit. And April onwards, suddenly in February and March, you will find revenues going up. You will not know how. This is all, blocking credit, telling they will call up the, your clients and tell, please don't take credit. Or if you want to pay by cash. You see the funny things that will happen, I will tell you. They will tell pay by cash. So your credit will accumulate. Next year, you will take that, you will use that credit for payment of taxes. Then they will order an audit and say the ratio of credit to your tax payment is very high in 1 year and very low in another year. So this is the mischief created by them only. So therefore, please understand, don't indulge your clients into any mischief. Just nod your head and keep going. That is the first principle, and you should understand. If they say don't use credit, keep on nodding your head and use the credit, because credit is meant to be used. See, please understand this. This is the second principle which you should keep in mind. Input tax credit is a tax which is paid by somebody else. It is nothing that the government is giving you. They've collected the tax, they're giving you the credit. You see the decision of the Supreme Court in Eicher Motors case, 106 CLT, where they said, input tax credit is tax paid in advance. Just like your TDS. Somebody pays the tax and you take the credit. That's all. There is no question of government giving you any concession or government saying that, we are giving you largesse. Somebody has paid the tax and you're taking the credit. So please keep this also in mind before we interpret these provisions relating to input tax credit. The first thing you notice about the GST law is this. As compared to the MODVAT, which was introduced in 1986, the SENVAT credit rules in 2004 were much wider. The GST law is even wider than that. Keep this in mind. While the MODVAT was related to goods, inputs, or capital goods, which are used in or in relation to manufacture of final products, the GST law, if you see, has nothing to do with in or in relation to manufacture. If you look at 16(1), it says, which is used in the course of furtherance of business. They don't talk of manufacture. They don't even talk of supply. In the course of furtherance of business. So therefore, any goods, any services which are used by you in your business is eligible for credit. It is only by definition, they have definition for inputs, they have definition for input services, and they have definition for capital goods. There also, if you see, capital goods is goods which are capitalized in the books of accounts. Now, who takes this decision of capitalization? The decision is taken by the chartered accountant. The businessman will not know what is capital or input. He wants only remission of tax. He's not interested in all your jargon. He does not know what is capital goods, what is input services. He's least interested in all this. So the chartered accountant's role is very important here, because it is a chartered accountant who will decide what is capital goods for that company or that business and what is inputs for that business. There is no universal test. For example, if I'm sending out a sophisticated machinery which has a computer, let us say computerized laboratory equipment I'm sending out for testing COVID. For me, a computer is an input. It is not a capital goods, because that computer will be dispatched along with my final products. So please keep in mind that the same item in X company could be capital goods, but in Y company, it could be inputs. You have to necessarily look at the supply chain, the manufacturing flow chart, and find out what is inputs and what is capital goods. Only those which are capitalized in the books of accounts are called capital goods. The rest, the goods are all inputs, because inputs is defined as all goods other than capital goods. Simple. Input services, all the services which I receive. So it is wide enough to cover a huge gamut of items on which you can take credit. Only those which are blocked credits, as per the legislature, I'm saying. We'll come to that later, which is what we think is blocked and what we think is not blocked. Only the blocked credits, as per the legislature, you cannot take credit. All other items, you will be eligible to take credit. So the golden rule, which I've always told across the country, is this. When you are in doubt, when you are sure, take input tax credit. When you are in doubt, take input tax credit. It's the same, no difference. Now let us come to what are the conditions for taking this credit, because that is very important. I've told you that all inputs, all your input services, all your capital goods, you're eligible to take the credit. Condition is they should be used the course or furtherance. Please understand these two are different terminologies. In the course means while I'm doing business, whatever is there, I take credit. In furtherance of business is a wider term. Furtherance of business may be before the business or after the business. If I do some advertising, it is something which takes place in furtherance of business. It could be in the course of business or it could be in the furtherance of business, because of which I'm taking the input tax credit. What are the conditions which have to fulfill that before I take this credit is mentioned in 16(2). So we go to those conditions, because those conditions slowly the legislature will keep on adding. What happens is when they introduce the input tax credit scheme and GST, they said it will be seamless. But let me tell you, it is worse than your service tax credits which are there. I'm sorry to be telling you this. In service tax regime, if I took an input service in Bangalore, I could transfer it or I could set it off against my centralized legislation in Delhi. I could do it. I am registered centrally in Delhi. Whatever credit is taken in Bangalore, I can set off. If my head office is in Jaipur, I could set off my credit in any part of the country. Can you do it now? unless you have the input service distributor regime flowing in each state. You have to be registered in each state for this purpose as an IST. You will not be able to take the credit sitting in Jaipur because there's no concept of centralized registration anymore. So the credit which flows in one state, whether it's on central account or on state account, does not come to your credit in Jaipur. And therefore, all this cascading effect of taxes which you are seeing as an objective is only partial. It is not full. Keep this in mind. Simple example. Let us say Mr. Yashaswini, who has his practice as, let's assume he's chartered accountant. I think he must be practicing as lawyer. Let us assume when he was practicing as chartered accountant, he would have gone to Delhi to argue a case. He would have stayed in a hotel. Hotel will cut him a bill in GST regime, charging SGST and CGST. When he comes back to Jaipur, how does he take the credit? He can't take the credit. So Mr. Yashaswini has to register as ISD in Delhi and distribute the credit. Is this what you're talking as seamless movement of credit? There should be some mechanism found to rectify this. Otherwise, what will happen is there will be a huge loss of credit which is happening in the industry. And that is what I suspect has fueled the revenue to 1,20,000, 1,25,000, which they're saying per month, is on account of coercive practices and loss of credit. And if you lose credit, let me tell you, you lose profit. If you lose profit, you become uncompetitive, very, very uncompetitive in business. Coupled with the fact that the government keeps tweaking with these export incentives every now and then and denying you refunds. I'm sorry to say that the GST regime in 4 years has been run down into a very sorry parallel. And therefore, litigation is the only solution for chartered accountants. Your business is to defend your clients. They are the ones who are paying you. Please don't turn your back on those people. This is my sincere advice to everybody. You are an officer of the court, no doubt about it. You have to speak the truth in court, no doubt about it. But your primary duty is also to your client who pays you. Keep this in mind. Defend him. If he comes and tells you, I have made statements saying that I have done some fake invoicing. Possibility is there. Your job is not to sit there and look as a revenue collector. That's not your bloody job. Your job is not to tell that, oh, as per the circular, this should be done. As per the authority for advance ruling, this should be done. You fellows should stop this nonsense. Put your head up and say, I will defend this client. So what? Even Kasab was defended. Mr. Kasab, who killed so many people coming into Bombay and putting a bomb and opening fire. That fellow was defended in courts of law. He's fake invoicing so heinous that you cannot defend these people. I'm not saying that fake invoicing should be done. No, it should not be done. They should not do it. But if your client is caught in an unfortunate situation, I'll tell you how. And this is happening. Let us assume for a moment's sake that Mr. Akash is supplying to me and to Mr. Yashaswini. All the invoices he gives to me is fake invoice. All the invoice he gives to Mr. Yashaswini is genuine invoices. I'm sorry, Mr. Akash. This is only an example. Department goes and finds out that Mr. Akash is indulging in fake invoicing also. What do? They will not come to me. They will go directly to Mr. Yashaswini and say, okay, you reverse the credit. Otherwise, I'll arrest you. Poor man, he has paid. He has got the goods. His invoices are all genuine. Not all of Akash's invoices are fraudulent invoices. At that point of time, Mr. Akash may even give a statement saying, yes, I have done some fraudulent invoices. So statement is there. So as a chartered accountant for Mr. Yashaswini, you should not throw up your hands and say, I am sorry, I can't do this. You fellow, what you have done, I don't know. My membership is at stake. No, don't rave and rant. It is your duty to defend Mr. Yashaswini to the best of your ability. If you can't do it, leave it to somebody who will do it. It is your duty. As a youngster, you should come out and defend those who have to be defended. Mr. Yashaswini who has got the inputs, was paid for the inputs. You have to defend that poor man. Even Mr. Akash has to be defended. He could have given the statement under duress. How do you know he gave the statement voluntarily? Nobody knows. Please understand, though I'm digressing from the subject, please understand the scope of section 136 of the CGST Act is to only make Mr. Akash's statement relevant, but it doesn't become a confession. Please keep this in mind. It is just a relevant statement. It has to be proved by corroborating evidence. Keep this in mind. Now with this, let us look at the conditions under section 16. Condition number 1 is that he should be in possession of the documents, either tax invoice or debit note as the case may be. Perfectly all right. I have the documents with me. Now, in this Finance Act 2021, they inserted AA. The details of this invoice and debit note should be uploaded by the supplier. What they say, it should be uploaded by the supplier, communicated to the recipient in the manner specified in section 37. That means to say, if Mr. Yashaswini has to take credit, Mr. Akash will have to upload it in his, what they call as 2A. He has to upload in his 2A, and then only Mr. Yashaswini will be able to take credit. So what happens if Mr. Akash refuses to do this? Let us say he has not uploaded the invoices. What happens? What can Mr. Yashaswini do? He has paid Mr. Akash the amount. He has received the inputs. He has received the invoice. He has done everything that he has to do. You couple this condition AA with another condition in C, which Mr. Yashaswini pointed out. Mr. Akash will also have to pay the tax. Then only Mr. Yashaswini can take the credit. Now, these two conditions, AA and C, I am sorry to say, are overtly unconstitutional. They do not satisfy the test of reasonableness as propounded by the Supreme Court in several decisions in Article 14, and they are unreasonable as per Article 19. Why? Why do I say this? It is unreasonable to expect Mr. Yashaswini to go to Mr. Akash's business, twist his arm and tell him, play the taxes. Upload to A. Can he do it? Mr. Akash will be in Jaipur, Mr. Yashaswini may be in Bangalore. How is he going to enforce these two conditions? So there is in law what they call lex non cogit ad impossibilia. The law does not require a person to do the impossible. Mr. Yashaswini cannot be expected to do the impossible. Whatever he can do, he will do. Mr. Yashaswini pointed out the decision of the Delhi High Court in Arise, followed by another decision in On-Quest Manufacturing 10 GSTL, where the Delhi High Court has analyzed this very well and said this: unless these two parties are colluding, there is no question of expecting the recipient to be eligible for credit only on the condition that the supplier would pay. It is impossible. And therefore, credit will have to, if that credit is not given, it becomes unreasonable as per Article 19. And any law which is unreasonable becomes arbitrary under Article 14 as per the dictum of the Supreme Court in Shaira Banu's case. If you want to read a classic judgment on Article 14 and 19, simply take 2017 SCC and read the judgment in Shaira Banu's case, where all these principles are digested beautifully by Justice Rohinton Narang. Read his judgment. It's beautifully done. So what is unreasonable in Article 14 becomes arbitrary under Article under 19 becomes arbitrary under Article 14. When I was arguing a case in Bombay High Court, they asked me, how do you connect 14 and 19? Then I had to read out the paragraph from Shaira Banu's case. It is so well written. So therefore, my friends, chartered accountants, you people are actually, by complying with this 2A and complying with this 36.4 and this clause C, 16.2C, you are doing a great disservice to the clients. You may say, no, we are doing it, sir, because what to do? We want to avoid the litigation. The client does not want to do. My advice to you, if you are on a retainer with such clients, please take down these things have a mail trail at least. I am finding a lot of cases going up to the institute on professional negligence. Please keep a mail trail of this safely, that you were advised to do this because of your client. See, what happens is sometimes when relationships go smoothly, it is good. But when relationship falls sour, there are any number of cases where the client says, I never knew about this. My God, this chartered accountant has done it all by himself. I am the dark. I don't know. If you put a piece of chocolate in his mouth, he will not be able to bite it, your client. He does not know. He's such an innocent man. It's very unfortunate to see, because I'm seeing a lot of these matters going up to the council. Some of the really good chartered accountants who have done their job well and who have not, uploaded, keeping in mind 2A and other things, they have not done something. Client blames them and says that they are professionally negligent. If you have done either way, I'm saying both ways. If you have taken the credit when 2A is not uploaded, or if you have not taken the credit when 2A has not been uploaded, either way, please keep sufficient audit notes or practice notes in your file, backed by emails, to avoid any event of professional negligence proceedings coming against you, because you have only this degree to fall back upon. And if some such things are commenced, it takes years for you to get out of it. But since I'm talking on the subject proper, I also thought litigation should be avoided by chartered accountants in their own name also. Why only litigation of the client? They also have to protect themselves. They are also human beings. In protecting your clients, you should not expose yourself to action. That is very important. You're a professional. That is very important. So 16.2C and AA, both these conditions, in my opinion, are unconstitutional. The judgments which were rendered in the context of the earlier VAT will, in my opinion, continue to be still applicable, because they are talking of principles behind Article 14 and 19, not anything else, nothing other than that. So that is how you should interpret these two sections. Wherever possible, you should comply with the law to the extent. But where it becomes unreasonable, chartered accountants should remember this. Income tax 1961, the act, settled substantially well. I'm not saying it is fully settled. There are still disputes going on. Substantially, several concepts settled because of whom? It is because of chartered accountants. What is income? So many case laws is because the chartered accountants took all these matters up to the advocates who argued the cases. They themselves argued several cases before the ITAT. The same role which you played in income tax, you should play in GST. That is the concept behind these sessions that have been planned for you. What role you played in the income tax, please start playing it in the GST regime. Settle the law. Please don't think we are litigating because we want to make money. No. Everybody wants money. There is no doubt about it. Let's all face the facts. But we are not vultures or scavengers. We are settling the law. We are helping to settle the law, make the law better. So if you advise your client that 16(2)(a)(a) and C will have to be challenged, and it is challenged, and let us assume that tomorrow Supreme Court even upholds the challenge, is it not a victory for you as a fraternity? You are helping to settle the law. The government will become more reasonable in its input tax credit. See, you never had this problem in service tax. Did they insist that the supplier should pay so that you can take credit? It was not there. Only in the VAT regimes in our country, this was there. And our country, you see, is obsessed with frauds. Nobody sees how much of effort the government is putting into to manufacture and distribute the vaccines across the country. Some foreigner has to tell us, look at India, how they are doing. Are we not competent to realize ourselves? 20 crore people have been vaccinated in hardly a few months. And you're saying the second wave, you are not doing this, you are not doing this. As a citizen, what have you done? Nothing. You have gone and you have enjoyed all the festivals and spread. Every citizen is responsible for the spread. And let me tell you this, US went through its second wave. That time, did anybody criticize? Did India criticize USA? They did not. So let us not overly criticize things. Let us see if we can settle. GST is to be criticized. I'm not saying no, but that should be constructive. Settle the law. Fight it out in a court of law. Don't go to the department and expect them to interpret the way you want. Please, this is another thing which I find youngsters practicing. The moment they have a doubt, they don't pick up the book and read themselves. What they do immediately, that man is there, that useless fellow sitting in Jaipur, Mr. Yashaswini, he would have read everything and kept. We will call that man and ask him. Or that other fellow who came and spoke the other day on the input tax credit, that useless fellow, 2 hours he wasted our time. We'll ask that man. That should not be the approach. Or picking up the phone and asking the department assistant commissioner, do you think credit should be taken on this? I will tell you his answer, no. You are a chartered accountant. He should be asking you, not the other way around. You can read the law and you can understand. You're too good. What makes you think that because you're 20 years or 22 years, you don't understand the law? You read it, you can understand it. In fact, I have found in many parts of India, how we become experts, I will tell you the secret. In many parts of India, many youngsters ask questions for which we don't have answers. And then when we find the answers, we become experts. This is the secret of expertise that all the speakers who claim are having. I am no exception to it. I may read, but there are many things which we don't know, which are taught to us by youngsters when we go across the country. So therefore, I would say, challenge these two things. I think these are unconstitutional. The third, and which is very important for us, receipt of goods and services. Now, receipt of goods, I can understand you can prove under section 60. How will you prove receipt of services? In fact, in my opinion, receipt of services has to be read reasonably. If your law says, I will collect tax based on time of supply, where even advances are subjected to tax, you cannot then say credit can be taken only on receipt. That is wrong. As an example, let us assume Mr. Akash makes a bill on me for some services. Let us say he fixes his consultancy services at 1 lakh and asks for an advance of 50,000 rupees. Now I pay him that amount. He also issues an invoice. Now, obviously, the day I give him the money, I have not received the services. It's only an advance that I'm giving. How will I prove receipt of services? There's no way I can prove it. So in my humble view, 16 should be read that as soon as Mr. Akash has raised the invoice and has undertaken to pay the taxes, the matter ends, I'm entitled to the credit. If these two are mismatched, there is no way I can match them in future. That means I will have to keep an Excel sheet for all the bills that I receive across the country, service bills. What is advance, when I received it, when I consumed it. I don't think that is the intention of the law. Therefore, in my view, as soon as you get the invoice, you can take the credit, especially since you would have uploaded 2A and also paid the taxes. That is my view on receipt. Then we come to what I feel is another very, very controversial topic. He has furnished the return under 39. That means you have furnished the return. Very good. It says he has furnished the return. So you should be very careful. It's not the supplier who has to furnish the return. You should have furnished the return that way. So you must ensure that whatever credits you take, you must furnish a return under section 39. 16.4 causes certain problems. Now let me look at it this way. 16.2, 16.4. Why 16.4 causes problems? We have seen a number of case laws coming in it. 16.4 is a limitation. It says you cannot take the credit beyond September of the next year. That means for the year ending March 2021, the last I can take credit is the return for September 2021 or the annual returns, whichever is earlier. And therefore, it will automatically mean my September returns in most of the cases, in all cases. Now, the issue here will be, can you say 16.4 will override 16.2? Because 16.2 starts off with notwithstanding anything contained in this section. What is called non-obstante clause. So 16.2 substantive conditions. Let us say I have satisfied all the substantive conditions. Only thing, I have not taken the credit in time. Do I lose the credit? That is the question, which has to be answered by the courts. In my humble view, 16.4 is a law of procedure, because laws of limitations are procedural law. This we all know it. Substantive conditions are only in 16.2, and only that should be satisfied by us. So even if your credit is late, especially since today only 3B is being filed and 3 is not, we don't know when we are going to file 3. The day when we file 3, we should, the government of India should declare, when the GSTR 3 is ready, they should declare that day as some Divas Day. GSTR 3 Divas Day, which will be remembered by all the people in posterity, that this GSTR 3 was announced in 1st July 2017, but came into operation in 2022-23, or I don't know. Maybe when some of us become grandfathers and somebody becomes father, this may happen. But what I'm telling you is, today the controversy is, can you say 3B is a return? There was the Gujarat High Court decision in AAP's case, which is now pending in the Supreme Court. It has been stayed, where they said, this is not a return. It is just a memorandum. So they amended Rule 61(5) to say that it is also a return. But if you look at 39(1) and read with 61, it looks as if GSTR 3 is still the return. And therefore, the amendments made to Rule 61(5) are inadequate in my view. Not good enough. But it has been made. It's another round of litigation that we have to go through in several courts, whether 3B is still a return or not a return. But in my view, I think it is a case worthwhile to fight. There are two things which happen here. One is, what do you do with the credits that are missed out? Can you take it? Now, let us assume September 2021, you actually file the returns and some credits are left out. Can you take? If you take it on October or November 2021, it will invite automatically show cause notice from the government. Now, in my view, if you've availed the credit and not utilized it, as I see, Section 50 does not create an interest charge at all. We'll come to that sometime later, because I've challenged Section 50 in Karnataka High Court. I've got to stay on some of the notices already. Section 50 talks of only interest on input tax credit, only if there is a mismatch between the supplier and your end. There is no substantive provision for charging interest when a credit is taken wrongly or utilized wrongly. In section, it is not there. Please go through and tell me where it is. The department was not able to point out in the High Court when I raised this point that 50(3) was designed when they envisaged GSTR 3 and GSTR 2 will be working. Unfortunately, those modules are not working. So therefore, there is no substantive provision for charging of interest if you have taken input tax credit wrongly or utilized wrongly. Nothing is there. All that you have is Rule 42 and 43, which is a separate provision. It operates only under 17(2). Therefore, in my humble view, all your input tax credit interest is not payable at all, because there is an absence of substantive provisions for charging of interest. Keep this in mind. Challenge it in your Rajasthan High Court. When such a matter comes up at the appropriate time, please keep this in mind. The second thing which they did was, and this is a good amendment which they made and brought it into force, I think from 1/1/2021, invoice or debit note relating to such invoice. They said in that what they did was they removed out the relating to such invoice. So you may have a situation where, let us assume, your original invoice was made in 2017, you took credit. In 2000, let us say 21 or 20, whatever the date, you get a debit note. The question that will arise is, before 1/1/2021, can you, if the debit note was issued, can you take the credit? Because these provisions were brought into effect only from 1/1/2021. Any debit note on which you can take credit, if it's issued during the financial year. In my view, all such debit notes you can take credit. Reason being, this was only a clarificatory amendment. The law had some lacuna. The debit note which I issue can be after 1 year, can be after 2 years. When I realize some mistake, or when, let us assume, I have billed you at X price, but there is a price escalation clause after which I bill you afresh on the price escalation clauses through a debit note. What the law says today is that if the debit note is raised during the financial year, you can take the credit, no problem, even if it pertains to 2017 or 2018. So in my view, if you have missed out any debit notes in 2017, 18, 19, 20, please go ahead and take it now as credit by interpreting this deletion as retrospective in nature or retroactive in nature. Again, you will have case laws coming, please fight it. Because this is more like an amendment which is brought about to cure a defect which was there in the law. And therefore should be given retroactive. So this is some of my views as far as section 16 is concerned. Now we'll move to section 17. I was asked to talk about the block credits. Please understand, as I told you, as per the legislature, only if the credit is blocked, you don't take credit. Otherwise, you are eligible for credit. Even there also, if you look at the formulas under 42 and 43, which have been prescribed, you can avail the credit and reverse it. Availment of credit is always there. It is only the utilization which is blocked under section 17, is my humble view. That is how the formulas under 42 and 43 work. Now let us come to a situation in 17. What does 17 say? What is the purpose of 17? There are two purposes. One, if you are utilizing certain inputs in taxable turnover and some in exempt turnover, to the extent of exempt, you don't take the credit or you don't get the credit. That is called the principle of attribution. It was there in Rule 6 of the Senvat credit rules and 57cc of the ModVat rules which were there. There are any number of controversies on this issue. What do you mean by exempt supply? I'll give you an example. Let us assume that your end products, let us take an example. Let us assume your end product A. The rate is 18%. You're supplying to, let us say I'm supplying to Mr. Yashaswini at 18%. Now, there is an exemption notification which says if you supply this to defense units, it will be 5%. So if, let us assume Mr. Akil is from the defense and he places order with me, I charge him 5%. But I'm taking input tax credit completely. So the question which will arise, will my supply to Mr. Akil at 5% be treated as exempt supply? The answer is no. If there is no condition in the notification which says input tax credit should not be taken for supplies to defense, if there's no such condition is there, the notifications, it is very clear that exempt supply means exempt from the whole of the tax or charge to nil rate. So therefore, even if such a condition is there, let me go to the second step. Even if such a condition is there in the notification, such a condition cannot override the provisions of the Act under 17(2). Therefore, I must be entitled to the entire credit, input tax credit. There's no question of the input tax credit being reduced on account of you telling me that the rate is reduced. In fact, the hotel industry, the real estate industry, should simply keep taking the credits. There's absolutely no reason why they are barred from credits. They can continue to take credits and pay 18% only on the works contract, leaving out the land. Perfectly all right for them to do it. There is no bar on that. Coming to the block credits, one of the issues that was raised by Mr. Yashaswini was, you have the safari retreats case, and you know that following safari retreats, I had argued a very heavy matter in Karnataka High Court in Bagmane developers and got a stay at the Karnataka High Court. The issue is, let us assume that I am constructing a commercial complex. The person who constructs for me will be charging me tax. Now, if the law says, if I sell all these before completion and pay GST, I can take 100% credit. But if I keep this capitalized in my books of accounts and let it out for rent, I am not eligible for credit. This is the case of safari retreat. What the executive or the government argued was, input services are used to make a building. Which building is let out? So the letting out is remote. This is the argument. But the Orissa High Court felt that there is no logic in this, because ultimately, whether I sell it or rent it out, I'm paying taxes on the end. If I sell it, I pay GST on the building, which is under construction. If I don't sell it, I keep it to myself, I rent it out, I'm paying GST on the rentals. What difference it makes between these two people? Therefore, there's a principle. Two people similarly situated, if they're treated differently, it becomes discriminatory. What is called the principle of manifest discrimination under Article 14. You are discriminating against two people, both people paying taxes. It's not that the person who keeps the building does not pay the taxes. He is paying the tax. He is paying it on the rentals instead of on the building. So what difference does it make? In my opinion, the safari retreat judgment is absolutely spot on. It should be followed by the government. They should actually have not taken this to Supreme Court. They should have gracefully accepted this. Because I will tell you why. The person who has the building and rents it out is as good as him selling it to some other person who may then rent it. What difference it makes? You are collecting the end product GST. You are collecting the end product GST, either in the form of a building or in the form of rentals. So what difference it makes in you giving the credit? I have not understood 17.5 C. I have not understood these two provisions. Both should be struck off from the block credit chapter completely. They are a piece of legislation which is very, very discriminatory. Reason being, you are telling two people, both of whom you are paying taxes. One, you are saying, if you capitalize, I will not give credit. The other, you are saying, if you treat it as stock in trade, I will give you credit. This kind of a discrimination cannot, in my opinion, come forth in a law. I am not in favor of these two provisions, and I feel the Orissa High Court judgment in safari retreat has been correctly decided. And I only hope that this decision does not get set aside by the Supreme Court. Now, what will happen if it gets? Let us look at that also. What happens if the Supreme Court sets it aside? You will lose input tax credit. penalty cannot be levied because today you have an Orissa High Court judgment which says you can take the credit. Please understand the principle of judicial discipline in all India statutes. This is, I had argued this also before the Karnataka High Court and made them to follow the decisions of the Orissa High Court, where I told them. In paragraph 19 of the Supreme Court's decision, Justice Sinha's decision, he says specifically, if it's an all India statute, the decision of the High Court, any High Court, will have to be followed. Any High Court decision will have to be followed. Bombay High Court, Godavari Devi Saraf's case, 113 ITR, you will find the same principle. Any tribunal across the country will have to be bound by any High Court decision because it's an all India statute. You cannot bring the Article 226 and 227 into play here, saying that the High Court's jurisdiction extends only to the territory. No, you can't do that. In an all India statute, the High Court decision in any of the states are binding, unless your own jurisdictional High Court has taken another view. Let us assume Jaipur has taken a view, Jaipur High Court has taken a view that 17(5)(d) is constitutional. Then you have to follow what the Jaipur High Court says in Jaipur, and the whole of Rajasthan will be bound by it. But in the absence of any judgment, you are at liberty, and in fact, you must follow Safari Retreat's case. So penalty, in my view, cannot be levied. And I already told you, by virtue of Section 50 wordings, they cannot touch you on interest as of today. So all that happens is the input tax credit will be lost. So what you advise your clients is, keep aside the input tax credit and carry on with your business. If you feel so, that is the clients who feel extremely cautious there, for them you advise them this way. For the others as chartered accountants, they have to pay only 10% or 30% as the case may be. Keep that aside in the credit ledger and carry on and utilize. Because these are days of COVID where, people don't have money to pay salaries, let alone taxes. So therefore, in my view, the 17(5)(d) is unconstitutional. The other issue that was raised by Mr. Yashaswini was, how do you interpret this clause 17(5)(h)? If you look at this H, it says goods lost, stolen, destroyed, written off, or disposed by way of gift or sample. Goods lost, stolen, destroyed, written off. What are those goods? They are your inputs, not your finished goods. Please understand this. Section 17(5) talks of your inputs being lost, inputs being destroyed, inputs being written off, or inputs being stolen. So you look at these four terminologies. Please understand, lost, stolen, destroyed, written off, disposed of. What is the common thread which goes across this? The common thread which goes across this is, you have not been able to put it to use. I've lost it. It's got destroyed. It has been stolen. I've written off. It's been useless. Disposed of by way of gift or free sample. Now please understand this. If I have not used it, only then 17(5)(h) will come into operation. If I have used it, it's called the user test. First propounded, not in this context, but some other context, it was propounded by the Supreme Court in Rajasthan Chemicals case. Rajasthan State Chemicals case, 255 ELTU. Please take it and see. User test was propounded by the Supreme Court. What this? It's not in this context, but we can use it in this context to say, Goods lost means I have not been able to put it to use. Now, let me give you an example. Let us assume that I buy some iron and steel products and I put it through a process where I push a mold. I make a mold out of it. Obviously, some part of the raw materials will be lost or destroyed. Do you mean to say that all that credit has to be reversed? No. You had what is known as rule 57D in the Modvat rules, which specifically talked of this. That was inbuilt into the Senvat credit rules and here also, in the sense that if you have issued things to your production, if you have put it to use, the question of it being lost, destroyed, written off, etc., does not arise. So please keep this in mind. Often a question will be asked. I buy some diaries, I buy some pens and distribute it to give it to my distributor. When the customer comes and takes the final product and goes, he's given these diaries, or of course nowadays diaries are no use, but generally some free product is given to the customer by way of sales incentive. So the question which arises is this not inputs which are disposed of by way of gift? Supposing a gold coin is given for the purpose of promoting your TV sales. Can you say that this input has been given as a free sample or disposed of by way of gift? So that credit will be denied to you? The answer is no. It is not a gift at all. It is a grant. There is a difference between what's a gift and a grant. When I give something, expecting that it will result in sale, a sales promotion technique, it is not a giving of free samples. Please understand, I am selling TVs. If I give gold coin cannot be free samples. One. Two, it is not disposal of gold coin by way of gift. It is a grant given assuming that I will get a return. Keep this in mind. Third, the cost of all this is built into my profit and loss account and into my price ultimately. It's a sales promotion expenditure that I'm undertaking. So kindly note, 17.5H cannot be used to deny credit on sales promotion expenditure. Please keep this in mind. That would be my broad interpretation of 17.5H. Then we come to the operation of 80, because these questions were specifically raised. I will answer it. 86A, 36.4, two draconian provisions which go against the very spirit of input tax credit. I remember the first case on 86A is what I argued in Karnataka High Court, where I got a stay and the matter was admitted for final hearing, but because of COVID, it is still in that stage only. I had argued 86A results in what I call the future of litigation, where, please note this, your electronic systems, your software at the government end will not be in accordance with the rules. If you look at 86A, what they had done is, when you opened your system, you could not access your input tax ledger at all. You didn't know why. When you went to the department, there they showed electronic credit ledger blocked. It will come in the screen. So I told my client, please get out that screenshot. And we annexed it to the writ petition and said, we are having a problem here that the systems that are used by the government do not go with the rules. 86A, if you can block the credit without giving me a hearing, without complying with the principles of natural justice, without even telling me what is the reason why you're blocking the credit, then it has to be struck down. And the judge said yes and gave a stay. Prima facie, he found it very objectionable. And that is what Gujarat High Court has said in SS Industries. SS Industries case, this Gujarat High Court has said in 2020 TIOL, it is reported. They said 86A cannot be used just like that. You will have to provide a reason in the files for the purpose of utilizing 86, Rule 86A. Which means to say, 86A is a provision which has to be struck down. Because if you look at the reasons why credit is blocked, there is no reason for giving any hearing. They don't give any hearing. There's no procedure for issuing you a notice. If you look at the celebrated decisions of the Supreme Court, up to Sahara India Firm's case, what did they say? If civil consequences are attracted, it is necessary to give a complete hearing in the matter or comply with the principles of natural justice. So in my view, the Gujarat High Court very clearly said 86A can be invoked only if you have a reason to invoke it. That reason should be in the file. This is very important. See, the reason need not be given to the assessee. But when they issue a show cause notice, they should give him the reason. That is what was argued. When you block the credit, you issue a notice to me first and say, why you block the credit? Otherwise, how will I reply to you? How will I know why you are blocking the credit? What the government is doing is, this is very unfortunate. You block the credit in February. By the time the assessee goes to the High Court and gets the matter listed and gets argued as if it is in COVID conditions, what happens? Matter will be heard in April and stay will be given, but by the time the government would have looted with the revenue. I remember when I argued this case first, just the day before lockdown, this case was argued in the afternoon. I remember it in March 2020. That was the last batch of cases. The judge said, he was a very nice person. The judge, he said, you please argue this in the afternoon. 2:30 to 4:45, I argued these cases. At 4:45, he gave us a stay. Next day, lockdown. It was announced by our Honorable Prime Minister, which none knew at that time. I'm saying this is what happened. So in my view, 86A should be struck down completely. Now coming to 36(4), another relic, another harassment technique. How can you say that? See, this is the first time I'm seeing. You have a rule introduced to deny the credit. You had a section 43A first. Actually, this 36(4), if you carefully look, 43, it contains the same provision as in 43A. Now, section 43A, you never notified. You bought 36(4). There is no legislative sanction for 36(4). This budget, you amend and bring 16(2)A. Normally, you make the act and then the rules. Here, you made the rules and then validated it by inserting 16(2)A. That means to say, since it's not given retrospective effect, 36(4) cannot be used into operation for a period prior to this. It loses its sanctity. So you can argue in the courts of law tomorrow that 36(4) is a provision which cannot be used by the department at all. And if they have used it, they have to give back all the benefits. till such time 16(2) AA was notified. And then you separately challenge 16(2) AA also. As I had already told you this. So these are my views on 86.4 and 36.4 and 86A. 86B, less said the better. I do not know how they can bring out such kind of rules. 1% you pay, 99% you do this. What kind of, this is like your, what we do on a day-to-day basis with the vegetable vendor. Can you make laws like this? I will go to the vegetable vendor and say, no, I will put only 100 rupees in phone pay and for 50 rupees in cash and 30 rupees is credit to be given to you next month. What kind of, are we in this kind of a situation in the country that we have to do all this with the associates? 1% I will hold back, you pay in cash, 99% you this one. What are they trying to do? I am not able to understand this at all. This is absolutely absurd, this rule. It's a very bad rule. See what happens is, I'm not saying that the rule, you can introduce rules. Any number of rules you have the power to introduce, no doubt. But every such introduction of the rule goes against your objective of ease of doing business. You have said, I want ease of doing business. Having said so, are these rules going to subserve that objective? No. They have made matters worse for the country. Now, another topic which I have to touch, the transitional credit. I'm very sorry to tell you this because I have argued so many transitional credit matters that virtually I'm finding it exceptionally difficult to understand what the revenue is telling. You take a situation where when is transitional credit how does it operate? On 1st July, when I dispatch my final goods, I'm going to pay GST. And therefore, whatever credits is accumulated on account of that GST payment, I take it as my transitional credit. That was in my earlier regime. So I'm simply bringing forward those credits which I've already earned. And day in and day out, I find the government arguing transitional credit cases saying, if the credit is given, crores of money goes out of the government revenue. I can't understand this because they have collected it from somebody already. That is what comes into your hands as credit. Where is the question of revenue loss? I was very happy to see when I argued, you please refer to this judgment, Asiad Paints by the Karnataka High Court, which I had an occasion to argue. We were two lead counsels, one lead, there was a senior advocate and me, both of us argued this case before the division bench. And very luckily, we had a judge who asked this question. How is it a revenue loss for you? Please demonstrate. The government was not able to demonstrate how it's a revenue loss, and they cannot. There are two sets of cases which happens in the transitional credit, where you have challenged Rule 117, 1A, and where you have challenged Section 140, where you say time limits could not have been prescribed, or even if they are prescribed, you cannot take away a vested right through time limits. One set of cases. These cases are all pending in the Supreme Court, where there is a challenge to Section 140 and the challenge to Rule 117, because when the government introduced 117 and said you should file your returns by 27th of December, they also introduced 117 1A sometime in 2018 and said the credit, if there's technical difficulties on the portal, you can take credit. That date was extended now up to 31st of August 2020. Now, what is technical difficulties on the portal? Nobody understands this terminology. And we were able to prove to the Karnataka High Court, you can't have technical difficulties only for the department and not for us. We may also have technical difficulties. So there are two sets of cases where the constitutional validity has been challenged. Those matters are all pending in the Supreme Court. We took the alternate way where we did not challenge the constitutional validity, but we said that under Article 226, keeping in mind the powers of the High Court, it is perfectly possible for the High Court to exercise its discretion and say that the vested right should not be taken away because of time limits. There are two sets of decisions which come. One is the Bombay High Court in Nelco and the Madras High Court following Nelco. These two were against us. While this Delhi High Court decisions in brand equity and SKH is one decision, and the Punjab and Haryana High Court in Adford Technologies. These decisions in Adford and other decisions of the Delhi High Court, which did not touch constitutional validity, went to the Supreme Court. And Supreme Court declined to entertain the SL. So we relied on the SKH decision of the Delhi High Court to show the Karnataka High Court how the Delhi High Court had, in spite of brand equity being stayed, given the relief on the ground that the rules cannot operate in this manner. Technical difficulties means technical difficulties for all, not just for the department alone. Even for the assessee, he could have some technical difficulties. So even from that point of view, we could prove in Asiad's case and a whole batch of matters where the Karnataka High Court said, yes, you can open directed the department to open the portal, and they gave time up to 31st of March 2021. And immediately the department went to the Supreme Court, which they will do. But fact of the matter is, the transitional credits, I'm very sorry to say that the government should not take this attitude. It's a legitimate credit that should be passed on to the assessee, and on technicalities, they should not stop the credit. See, let us look at it this way. You announced 27th of December 2017 as the date. And you kept on extending it up to 31st of August 2020. Almost 2.5, 3 years. Because of difficulties with your system. What does it show? It clearly shows that there are several difficulties which were faced by the assessee and the government. Why can't you be broad-hearted and give the credit? The other question which comes up in my, I think this is what Mr. Yashaswini wanted to ask. What about the real estate sector where the inputs or input services were work in progress as far as construction is concerned? Is this the question you wanted to ask me, sir?
Yes, sir. Basically, the credit which was there for the steel and cement and everything, which was used to build the entire building, which was standing on 30th. Yes.
In my opinion, if you look at the Constitution, 366(29)(a) subclass B, it very clearly says goods in this form or in any other form. L&T judgment, Supreme Court, if you take it and see, it says it's a tax on goods, whether as goods or in any other form. So in my view, the steel and cement which get embedded in the structure and which is a work in progress at the time of 1/7/2017, you must and should have taken the credit. The credit is available, you must have taken the credit. And even if the wordings, sometimes, there is some problem with the wordings of the provisions also. They talk of works contract, they talk of, you could have gone under any of those other entries also. Fact of the matter is that you are paying tax on that building under the GST regime. If that be so, credit should be available. That is my humble view. Then the escalators. One of the issue with our professionals is very early they go to what is called by them as the authority for advance rulings, and what I call the authority for adverse rulings. 99% of the cases which have been decided by these so-called authorities are against the assessee, because it is manned by only departmental people of the level of the assistant commissioners, and the what they call the appellate authority for advanced ruling is worse than this fellow. That fellow is the commissioner level. Please avoid these two forums, because these two forums are killing your assessees. And if they kill your assessees, they will never get even with you in the long run. Escalators. If you look at the decision of the L&T, what do they say? It's a works contract. The issue which arises is this. If it results in an immovable property, the resultant is an immovable property, part and parcel of immovable property. Is it denied the credit? In my opinion, no. If you can justify the erection and commissioning as plant and machinery, plant and machinery means apparatus, equipment, and machinery fixed to earth. If it comes in that explanation to section 17, it can come there. The only question is it excluded by the term land, building, or any other civil structure? See, there are several decisions in the income tax regime, if I remember. By memory, I will tell you, Anand Theatre's case was there, which went against the assessee. 243 ITR, there was one case which went in favor of the assessee. All this was considered by the Supreme Court in 339 ITR, Victory Aqua Minerals case, where the Supreme Court laid down the user test for finding out what is a plant. If something is necessary for the purpose of supply, for sale, it becomes a plant. For example, a nursing home built to a particular standard is a plant for the assessee. The building will be modified. The CT scan room will be modified for the purpose of absorbing that radiation. It becomes a plant. But I will tell you this also. They plugged this in the Income Tax Act. Way back in 2004, they plugged this. Same thing they plugged it here when they said land, building, or other civil structures. So in respect of this, my view would be this. If the erection takes place separately by normally lift manufacturers are separate, Otis elevators or so and so, they come and do it. It is taxed as works contract, is obviously an immovable property, no doubt about it. But under the explanation to 17, it still fits as a plant and machinery embedded in the building. And therefore, in my view, you must and should take the credit and then lend your name to a famous case, because obviously these matters will go up to the Supreme Court. There is no doubt about it. So these are my thoughts on litigation in input tax credit, because I've already come to 5:40. I will not be in a position to take your question and answers if I continue further. But if there's any questions and answers for the next 15-20 minutes or whatever time is there, covering aspects which I could have covered, input service distributor, and this is one thing which I would like to tell you before I go to the question and answer session. ISD is an optional route. Please understand this. ISD and cross charge are two different things. Cross charge means that the branch is supplying to the head office or vice versa, either goods or services. That is cross charge. IST means it is just a distribution of the credit. There's no cross charge involved. There is a distribution of credit. And the wordings of 22 say that, or when interpreted, means that it is optional. Supposing there is a head office which is rendering or supplying services. Also, it has a lot of common credits which are coming in. It is not compulsory for the head office to distribute the credit to the factories. There's no such compulsion. The head office can utilize that credit for its own purposes also. If the credits are inadequate and they have a huge amount of payments that they're doing, they can take the entire credit and set it off. There is no compulsion that input tax distribution should and must and should be followed. But if you choose to follow, then 20(1) will apply, which means you must and should follow that formulas. That is how we interpret input service distributor provisions. Now you're welcome to ask me the questions, sir, on any aspect which you think I have probably not covered or even covered.
Thank you very much, sir, for your brilliant deliberation on this sensitive and the hot topic that is going on. I have a few questions I would like to ask. Sir, in case of medicine manufacturers, they receive back the expiry goods and the expiry goods have to be, they have to be let or destroyed. Whether ITC has to be reserved, reversed in that case.
Please, see, please understand this. They have taken input tax credit on the raw materials, manufactured finished goods. Finished goods have also been supplied, tax has been paid. Now it so happens that some of the finished goods have not been utilized and therefore it's got expired. So they take it back and destroy it. Matter ends. There is nothing to be done. There's no question of you reversing the credit which you took originally, in my opinion. It has to be destroyed and the matter ends there. That's all. Nothing else is to be done.
Okay, sir.
Now, supply is done. Supply tax has also been paid. So what more?
Okay, sir. Now another question is, in case of a trader, what if someone has given goods as sample, but these are not free as they have made a bill of ₹1 just for the sake of making bill, which is very notional in comparison to what they should have charged. Sir, in this case, 17.5 comes into question, sir.
What is that? The 17.5, how will it come?
That's what the question is, sir. They are asking for reversal or something, because they are charging instead of 100, they are making a bill of ₹1. So whether they have to.
That is up to them. You take the credit and you enjoy it. As I told you, there's a difference between what is given as gift and grants. It's not a gift. Sir. Gift means completely free.
Sir, is it possible to contest cases of refund rejected on account of time barred, that is for excess payment of tax or accumulated ITC on account of exports?
You see, the 11B decisions till date are against the assessees. But I am of the view that time bar is only a procedural provision. In a refund on exports, the conditions and limitations that are prescribed, which are substantial, if I follow or if I have satisfied that, I believe that time bar is procedural in nature. But till now, most of the high courts have not found favor with that argument. So we will have to necessarily fight it out. The 2 years, if you say the 2 years has to be relaxed, for example, in my view, you should fight it out. And keep the issue alive. Why I'm telling you this is, case laws keep on developing. The judges who decided yesterday are not there today. They may have a different view on this. I have seen often many cases which we thought were hopeless in 2004. became very good in 2010. I'll give you a simple example. You take this mutuality concept in service tax. 2004-5 onwards, these things started in 2005. 2018 only it was settled by the Supreme Court in Calcutta Club's case, and I was happy that I was also part of those arguments. 13 years it took me to take all those matters. Of course, there are many seniors also who argued that matter. Esteemed people who had also waited for these 13 years and carried the matters. So the fact of the matter is that what looked hopeless in 2005-6 became extremely good in 2018, prompting the government today to make amendments in Section 7 in this budget. They were frightened of the Calcutta Club's case, and they have made retrospective amendments to in the 7(1)AA, which also is not adequate in my opinion, but nevertheless they have made it. So in my view, do not give up any case. Even if it's on time bar, you file the appeal, you see, these appeals will take a long time to be decided. If it goes to tribunal, it will take 5 years, 7 years, 8 years, whatever. Keep the issue alive. You may suddenly get a decision in your favor.
Okay, sir. Another case is, sir, from supplier's perspective, debit note can be raised even after 2 years, but credit note has to be issued by September of the following next year.
Who issues the credit note?
Sir, credit note is being issued by the person who is giving it.
That is true. Well, you don't issue, what happens?
Sir, the input is
See, there are two things. There are two different scenarios. One is supplier issues you a debit note when their tax rates change, or maybe the price is itself subject to escalation, and therefore he raises, you can take input tax credit. Fine. You issuing credit note is because of what? Price reductions. There, what the government says is, you please do that within a particular time limit. So don't mix these two issues.
Okay, sir, that's the reason. Maybe another that they have their accounts audited. So what is the need for extension?
Yeah, see, credit note is a system where it's not much consequence now. If that other person has taken input tax credit, he will not even bother about the credit note.
Sir, another question is, can we take a credit of import services if outward service is totally exempt by way of exemption notification?
Please take it, challenge it, sir. Please challenge it, because what happens is, in that case, see, if the notification is exempt unconditionally, this is a very good question. If the notification says 0% unconditional, then you can't take any credit. But if the notification says 0% conditional, then it is up to you to either follow the 0% or you pay normal tax rate and take the credit. It is up to you. Any conditional notification is at the option of the assessor. That is why I say 3/2019 issued to the builders or developers is merely an optional notification. You have in the notification said it's compulsory, but you have fixed some 25 conditions which no builder can follow. So it is merely option.
Sir, another question is cross charge compulsory to follow?
See, this is what I'm saying. Cross charge is different from distributing credit. If you have made a supply from branch to head office to branch, cross charge is a must. If there is supply, cross charge follows. If there is no supply, it's only expenses distribution, there is no question of cross charge.
Sir, can we take GST input on warehouse construction material like steel, building, etc.? Okay.
Because you are using it for providing warehousing services on which you are paying tax.
Yeah.
Please do it and fight out the case, because unlike in Safari Retreats case, where there was a rental, here also you use the same analogy to say, I am providing warehousing and storing services. And therefore, I'll give you a hint. Why did they bring about this provision? You look at the history. In Senate credit rules, they introduced this prohibition because there was a case law of the Andhra Pradesh High Court, Sai Samhita storage case, 270 ELT volume. Sai Samhita said, whatever this question, same question as asked Andhra Pradesh High Court. I am utilizing steel and cement building warehousing services, I'm paying service tax. High Court held, yes, you can take the credit.
Okay,
So
sir.
they plugged it in the Senate credit rules. But when it comes to GST, it causes a discrimination. Nobody challenged it there. Now you can challenge it here.
Okay, sir.
So take the credit, and if they issue your show cause notice, go to the High Court.
Sir, one case is regarding TRAN input. SSC did not disclose details of pending C-form in TRAN and claimed the entire mod VAT available as on 30th June 2017. Thereafter, he submitted all the C-form and assessment was done accordingly. However, under GST audit, it was pointed out and show cause notice is to issue to disallow the same. Whether the action of GST department is correct and what
the
to do.
C-form business is completely, there are several judgments. It went up to the Supreme Court also, whether C-forms can be issued at all. The Supreme Court said, yes, it can be issued by virtue of several High Court decisions which have said C-forms can be issued. So this is a case where he will not be able to take the credit by opening the TRAN one. Right, and the C-form assessments has to be given in his favor. So in my view, he has to either get the refund or he should be allowed the TRAN one opening, one of the two. And therefore, he should go only to the High Court and challenge these matters.
And avail relief, sir.
Yes, once the decision.
Basically, sir, this is other way around. What is happening in the states is that they have taken the entire credit which was there in their returns as on 30th of June.
Okay.
And now most of the states have increased and extended the limit of filing the submission of the declaration forms.
Okay.
Now what is happening that suppose that 1 crore forms were pending, and there are 3 scenarios. One is that nothing assessee could not acquire anything. Second, he has obtained all the forms. In that case, the matter done and dusted.
Yes.
And the third is that he has received some amount of forms. So it would be great for all the young people sitting here if you can enlighten that how to react on those particular two issues.
Let's see what happens with these C forms is that during the course of assessments, if you are not able to claim the put the C forms, what is the effect of it, Mr. Yashasvi? What happens? You are made to pay the tax, correct?
Yeah.
The effect of it is that the tax will be paid.
Yes.
Right. But as far as the credit is concerned, the spending, he would have carried forward the entire credit already. He has done it. So if he has done the credit, so as far as the credit is concerned, there will be no problems. It only becomes a case where the C forms are submitted or not submitted. So in my view, the TRAN 1 credit need not be disturbed at all. Even if you have not shown the C form, pending C forms in your TRAN 1, the benefit which is vested in a statute will continue to be vested with you. And therefore, if you can produce all the C forms today, you are eligible for that, the benefit that the statute gives you. That is one. Two, if you cannot give the C forms today, to that extent, you have to actually pay the tax. What you need to do, however, is once you pay the tax or whatever it is, you go in appeal. Because I have seen many times C forms, if you don't get today, say you get 50%. First appeal, you get another 10%. Second appeal, you get another 10%. It is still considered. It is still considered. So keep those issues alive and please take the credit, whatever credits you have taken, keep those credits also with you.
Okay, sir. Now another query is regarding elevators. Supreme Court in excise era has stated that render judgment that elevators are immovable property. Can we take now credit through explanation in case of administration offices or manufacturing units where elevators are used?
You have to take it and fight your case, sir.
So the problem is for fighting.
Yeah. See, let me tell you this. Input tax credit is the heart of VAT. That does not mean that several persons will not do damage to the heart. They will keep on trying to do damage. You will have to keep on trying to save it. You are going to have maximum litigation in input tax credit. There is no doubt about it. Ever since mod VAT, I'll tell you one thing. When mod VAT was introduced, after several years, about 5-6 years of its introduction, we used to call it mad VAT.
Okay, sir.
Yes, sir.
Sir, can government make retrospective amendment by section 7(1)AA? This is the question only, sir. Can government make a retrospective amendment by section 7(1)AA?
What does that have to do with the session? I don't know.
I don't know also, sir.
See, government is allowed to do any number of retrospective amendments. But you don't get into that. Retrospective amendments are not easy to make. They have to consider several objections before they do it. So don't worry about it. You fight your case. If they make a retrospective amendment, we'll look into it at that point of time.
So actually, there are a lot of queries filling my chat box, but due to dearth of time, we cannot take out. So I would apologize to the participant.
Yes, it says, see, Tran 1 says, for example, migration of cess, Madras High Court Sutherland's case says it cannot be done. But my view is that you please take the cess and please migrate it into the Tran 1 and fight this case, please.
Sir, what if department has issued audit investigation and in one of the audit para disallows the ITC on account of mismatch of GSTR 2 and 3B?
It is after all an audit for you. Why do you worry? Don't even care about it. Don't do any reversal. Let them issue show cause notice. Even after they issue show cause notice, you don't need to reverse. You fight it out. First appeal 10%. Second appeal 30%. Why are you worried? Go ahead and fight it out.
Yes, sir, I will. I think that participant has left, or I think when someone was raising their hand. Okay, another query, sir. Section 36(4) restricts buyer to take credit until it is shown in 2A considering 5% rule. And according to rules, we can claim the ITC of that invoice till September of next financial year. What if the supplier do not upload the invoice till September also?
Take the entire credit. That's all. Don't even bother about it. Take the entire credit. If he uploads, if he does not upload, don't care about it. You take the credit.
Okay, sir. The fund of ITC goods in case of e-commerce supplier of garment is denied. How to deal with it? Someone is asking.
No, I didn't understand this question at all.
I don't know why they have denied also.
I can't understand why.
Yeah. So, okay. Sir, these were the queries.
One person has raised his hand from iPad.
Yes. Good evening. Can I ask my query?
Yeah, please go ahead, sir.
Yeah. So, Mr. Raghuraman, very good evening, and thanks for such a good session. So, my query is that I'm a service provider. I was registered. I had a single registration in service tax regime, and I had accumulated credit. So I was eligible to migrate the credit through Tran 1 under section 140 subsection 8. But what happened by mistake, I transited it under section 140 subsection 1.
Nothing happens.
Sir, just let me complete, sir. So what happened that, when this amendment came to section 140 subsection 1 in 2019, where the term semi credit was qualified with eligible duties, I reversed it under protest. Now I realize that same amendment has not been effected in section 140 subsection 8. The term semi credit is not qualified by eligible duties there. So my
Okay.
question is that at this stage, can I again file my Tran 1 under section 140 subsection 8, because there is no time limit prescribed for 140 subsection 8?
That is a good question, because you have first filed the Tran 1, taken the credit, and now you have
Reversed it in the protest.
reversed it in your existing GSTR, that is your
Absolutely.
electronic credit ledger, correct?
Right, sir. Right, sir.
Retake the credit.
I can again file Tran 1, sir?
No, why should you file Tran 1? Retake the credit.
Retake the credit.
Just retake the credit. Suo motu, it's called suo motu credit.
Okay.
Take it, you will get a show cause notice, fight it out.
Okay. Okay, sir.
Okay.
Thank you, sir. Thank you.
Okay, sir. Thank you for your extremely important and the most important topic currently and the hot topic right now. Now, I would like to invite Sri Ankit Maheshwari, sir, who is Secretary of Jaipur branch of ICI, to address both of things, sir.
Thank you, Akhil. Thank you for moderating this session. My sincere thanks to Raghuraman sir, who has been taking this session flawlessly and clearing so many doubts. Akhil was like on fire. 1 question, 2 question, 3 question. And I think everybody sitting here or sitting in this session got very satisfactory answers, sir. Our sincere thanks for coming up in this session and addressing such a relevant topic, because I think the idea of litigations and the idea of input tax credit, the problems related to it, they all are absolutely relevant, and they are the next opportunities coming up. We can't, always rely on filing of returns or the compliance part. The opportunity, Akashji, I think you were spot on here. The opportunity lies here, and getting best of the speakers in this entire duration of 6 days. I am really thankful, sir, for coming in this pandemic time. And
What else are we doing? This is all we are doing.
Keeping
now.
us away from at least 1 hour. But out of Corona, that makes it so fantastic. So my sincere thanks to everyone who has attended this. My sincere thanks to my elder brother Yashasvi Sharma Bhaiya for coming in this session, and he is one of the brainchild. I know that I might not have talked to you, but I know that you are the brainchild behind this and conceptualizing this entire workshop. Thank you once again, Akhil. Thank you, everyone. Stay safe. Please stay at home. Attend more webinars to be at home. Right.
Thank you, Ankit, sir.
Thank you. Thank you very much, sir.
With this, I would like to conclude the webinar and show my sincere thanks to Raghuraman sir and all the participants who have participated. Thank you very much, sir. Thank you.
Thank you, sir. Thank you, Raghuraman sir.
Thank you, sir. Thank you, Yashasvi ji.
Thank you so much. Bye.